Right now, as we speak on this Monday, December 8, 2025, NVIDIA Corp is trading at exactly $183.26 USD, pushing up by roughly $0.85 or 0.47% for the day. If you are watching the charts, you are seeing a stock that is technically green but feels incredibly heavy, like it is wading through molasses rather than sprinting. The market is open, the tickers are flashing, and while a 0.5% gain might look steady to the casual observer, the internal mechanics of today's trading session tell a much more aggressive and conflicted story. Most people looking at this price action assume it is just another quiet Monday drift before the Federal Reserve makes its interest rate decision later this week. That is the expectation, a holding pattern, a pause, a breath. But the reality is far more volatile and specific to a developing war in the semiconductor space that most retail investors are completely missing. The calmness on the surface is masking a massive structural shift happening in the background, involving Meta platforms and Google. And if you are holding NVIDIA shares or thinking about buying, you need to understand that this $183 price tag is currently the battleground for a conflict that goes well beyond simple earnings beats. Let's look closer at the intraday movement because the tape tells the truth. The stock opened this morning at $182.64, dipped briefly to a low of $182.40, and has since been grinding higher, tapping a high of $185.70 before pulling back to where we are now. The volume is telling us something critical. We are seeing about 62 million shares traded so far, which sounds like a lot, but for NVIDIA, that is actually lighter than its average daily volume of over 200 million shares. When you see price grinding up on lower volume, it often signals a lack of conviction from the big institutional players. The big money, the Fidelity investments managers, the pension funds, the sovereign wealth funds, they are not aggressively chasing this price right now. They're sitting on their hands. Why? Because the narrative is shifting from NVIDIA has no competition to NVIDIA's biggest customers are becoming its biggest threats. The expectation for the last 2 years has been that NVIDIA is the only game in town for AI infrastructure. The reality hitting the wire today is that Meta is reportedly in deep negotiations to use Google's custom tensor processing units, or TPUs, for their next generation of AI training. This is a massive crack in the moat. We are talking about Mark Zuckerberg potentially bypassing Jensen Huang to rent chips from Sundar Pichai. That is the Godzilla versus Kong moment of the chip industry, and NVIDIA is the city getting trampled in the middle. When you analyze the order flow today, you can see this anxiety playing out. Small lots are hitting the bid, likely retail traders using the Robinhood app or SoFi Invest who see a green day and want in. But the large block trades, the ones that typically signal heavy accumulation from Fidelity Wealth Management or big hedge funds, are noticeably absent or are hitting the ask only defensively. The stock is pinned near this $183 level because the market is trying to price in what a Meta-Google alliance actually means for NVIDIA's margins in 2026. If the hyperscalers, the massive tech giants that account for nearly 40% of NVIDIA's revenue, start trading technology with each other to avoid paying the NVIDIA tax, the infinite growth thesis gets a serious haircut. This is the tension between the expectation of endless dominance and the reality of a maturing, cutthroat market. It is fascinating to compare this specific moment in NVIDIA's trading history to what we see with Tesla stock. When Tesla stock has a quiet day, it's usually because Elon Musk hasn't tweeted in 24 hours. When NVIDIA has a quiet day like today, it's usually because the smartest people in the room are running complex risk models on geopolitical supply chains and custom silicon adoption rates. The volatility here is more cerebral. For instance, if you were using Schwab Intelligent Portfolios or managing your own funds through an individual brokerage, you might be looking at the Relative Strength Index on the daily chart. Right now, NVIDIA's RSI is hovering right around 50. It's dead neutral. It's not overbought, it's not oversold. It is waiting. The price is currently testing a resistance level at $183. If it breaks cleanly above $185 with volume, the bulls are back in control. If it fails here and rolls over, we could retest the $175 support zone very quickly. We also have to talk about the broader sector context, because NVIDIA does not trade in a vacuum. Today, we are seeing some sympathy moves in AMD and Broadcom, but nothing spectacular. The entire semiconductor index is holding its breath for the Federal Reserve on Wednesday. High-growth stocks with high price-to-earnings ratios, like NVIDIA, which trades around 45 times earnings, are incredibly sensitive to interest rates. If the Fed signals that rates will stay higher for longer, that discount rate on future cash flows hurts NVIDIA more than it hurts a value stock like Coca-Cola. So, you have this dual pressure, the micro pressure of the Google Meta news and the macro pressure of the Fed meeting. This is why the stock is churning at $183. It's a stalemate. But let's step back and look at the company itself, because amidst all this noise, it's easy to forget exactly what NVIDIA does that justifies a multi-trillion-dollar market cap. At its core, NVIDIA designs graphics processing units, or GPUs. Years ago, these were just used to make video games look realistic, rendering light, shadows, and textures in real time. That is still a huge part of their business, and if you ask anyone in the gaming community, the GeForce RTX series is still the gold standard. However, the business model transformed when they realized that the parallel processing power required to render a video game explosion is the exact same math required to train a neural network. They didn't just stumble into AI, they built a software moat called CUDA around their hardware that made it nearly impossible for developers to switch to competitors. This is the Apple stock effect ecosystem, but for data science. You buy the chip because you need the software. However, the expectations for the company have shifted from hardware manufacturer to critical utility provider. They are now seen as the electric grid of the new economy. This is why reports of sovereign AI, nations like Japan, Canada, and France buying billions of dollars of GPUs to secure their own digital infrastructure are so bullish. It diversifies their revenue away from just Microsoft and Amazon. Just recently, we heard Masayoshi Son of SoftBank admit he was literally crying because he sold his NVIDIA stake too early. That kind of emotional regret from a seasoned billionaire underscores the FOMO, fear of missing out, that still underpins this stock. Even with the threats from Google's TPUs, the demand for NVIDIA's next-generation Blackwell and Rubin chips is reportedly off the charts. The reality is that while competitors are building good enough chips for specific tasks, NVIDIA is still building the Ferrari for the general-purpose tasks that drive the biggest breakthroughs. Speaking of holding shares, I want to hear from you. Comment below with how many shares of NVIDIA you currently hold and what your average buy-in price is. Are you holding from the pre-split days, or did you jump in recently using a platform like Robinhood Investments? It's always interesting to see where the community is positioned. Now, let's look deeper into the retail versus institutional dynamic we are seeing on the tape today. On platforms like Interactive Brokers, which cater to more sophisticated traders, we are seeing a lot of options activity. Specifically, there is a buildup of open interest in the $180 puts expiring this Friday. This suggests that a lot of traders are hedging. They are worried about a downside surprise from the Fed or more leaks about the Meta-Google deal. On the flip side, looking at data from retail-heavy brokerages like SoFi Investing or the Fidelity mobile app, the buy orders are still outpacing sell orders. Retail investors are buying the dip, assuming that any weakness is just a buying opportunity. This divergence is dangerous. When retail buys and institutions hedge, you often get a flush where the stock drops sharply to shake out the weak hands before recovering. If you are engaging in self-investing or using investing sites to manage your retirement, you need to be aware that the smart money is playing defense right now. Let's discuss the technicals again because they're critical for the next few days. NVIDIA is currently trading above its 50-day moving average, but is struggling to reclaim its 20-day moving average. This compression usually leads to a breakout, one way or the other. The Bollinger Bands are tightening. If you use a tool like Schwab Intelligent Portfolios, your algorithm might not catch these micro patterns, but for an active trader, this is a coiled spring. The key level to watch is $180.91, which is today's intraday low. If we break below that, the next stop is the psychological $180 handle. On the upside, we need to clear $185.70 to invalidate the bearish thesis. The future outlook for NVIDIA is becoming a story of how much is too much. The company is shipping chips as fast as TSMC can manufacture them, but the risk, the reality that could shatter the expectation, is a phenomenon called inventory digestion. We saw this in the past with other